All right, guys, so welcome back to the show. And once again, we have Andy Shackman with us today. And he's the CEO of Miles Franklin, an expert on the global monetary system. Now, Andy is my favorite goal whisperer and really telling us how things are in this fractured economy. So, Andy, today you're with us at a pivotal moment in world history. We are seeing a convergence of economic chaos and geopolitical maneuvering that could really push the economy off a cliff. And let us first start off with the BRICS summit in Kazan. I'm sure you're quite familiar with it. And during this period, we had pivotal bombshells being dropped on the world economy. Now, the first, of course, is a bold move to set up a new financial payments rail, and we are familiar with it. It's the BRICS Bridge. And the BRICS, they are trying to form an alternative system to replace SWIFT, which is what the G7 controls. Now, this is nothing short of economic war. The BRICS can now trade with each other without any threat of sanctions, and that really opens up big new possibilities for bilateral trade, right? So, my question to you to start things off is how big of a threat does this payment system actually pose to the US economy, which is the biggest in the world? And does this eventually lead to even more de-dollarization?
Yeah, I mean, it does. It's one of these deals where the Swift system is very, very, very entrenched, and these moves in and of themselves, which will incentivize local trade or trading with amongst one another in their common local currencies, whether they be CBDCs over Enbridge or even something more like through the SIPS, the cross interbank payment system, which allows these countries to trade with one another without the interference of the SWIFT system or using the Western intermediary banks. And yes, it chips away, very much so. It chips away at the hegemony that the United States has enjoyed for a very long time, and it's one of these deals, Sean, where I think it's not going to be an immediate trend that people will notice. It's not going to have immediate impact that people will notice. But what you are witnessing with more and more and more countries signing on to this group finding safety in numbers, it's something that will have profound effect over time. What it is, it's a growing realization from these countries that the current system doesn't work, that the current system can be punitive, even if what is bringing on these punitive penalties or sanctions are viewed as hypocritical in the eyes of the global South. So yes, it is a big deal, whether you're talking Enbridge, whether you're talking BRICS Pay, which will allow retail transactions to happen seamlessly amongst the BRICS countries. These are things that are accelerating that, a year or two or three ago weren't even on the radar. And so things start to gain momentum and gain credibility. So yeah, I think the fact that they're acknowledging it, that they're rolling it out, that they come back from the meeting and say, yes, we're really going to strive to trade with one another in our local currencies. These are real developments, but not something, part of the problem that the West has, Sean, is that instant gratification is never fast enough. And so
Right.
you end up with people saying, yeah, it didn't amount to anything. It's not amounting to anything. But what the BRICS nations are doing is making sure that they are not only having all of their ducks in a row, but they're backfilling everything so that each step of the way, these developments become more and more and more serious and more sustainable and more legitimate and more substantial. And with each and every day, not only do they make sure that these systems work, but you're getting, as a result of it, more and more people that want to take part in this group. And you can see that by, 45 countries that have said, yeah, we're interested in this. Some have formally applied, others have informally applied. But no question about it, it is the beginning of, you could say, the end of the hegemony. Now, in fact, I would argue the hegemony has already been more or less fractured. It's the supremacy that we're watching really get chipped away at, and other alternatives coming into play that I think have to gain legitimacy from the bloc, have to gain mass adoption. The first step, however, is those countries that are willing to move in this direction. And we're seeing that there are those countries willing to take this initial step, which over time will bring others into the fold. So yes, it's a big deal. It's not going to be a massive deal immediately, but it is leading towards that ultimate shift away from the dollar. And to underestimate it, I think, is a massive mistake for the G7.
I think what's really interesting is that during the BRICS summit, Russia kind of proposed a new monetary unit out there. Putin, he just floated the idea, and it's to be backed 40% by gold and another 60% by other BRICS currencies. Could be the ruble, could be the yuan, and the rupee. Now, the idea, of course, is to challenge the dollar and to keep trade flowing around the bloc, around the members. And considering we are still living in a world of fiat currencies, is this new monetary unit even feasible, it being backed by gold? And how would it even work?
Yeah, it is feasible. We learned about this a couple months ago in the meeting in Novigrad, which coincided with the G7 meeting. And there's one thing that I'd like to mention about this. There's been a lot of people who said, well, Saudi Arabia hasn't accepted the formal application to join the BRICS. And they seem to me to be playing both sides. And okay, so they didn't formally accept the invitation to the BRICS. But let's analyze it. And I'll answer your question in this roundabout way, Sean. So during the G7 meeting, which was in Italy, the Saudis were invited. And it coincided with this BRICS meeting in Novigrad. And the Saudis turned down the invitation to the G7 meeting in Italy and instead sent their delegates to the BRICS meeting. Okay, that's provocative in and of itself. At the same time, we had a situation where you have a Saudi administration who not only joins the BRICS New Development Bank, who joins the Shanghai Cooperation Organization, who tells the world that they're going to take other currencies for oil by not re-upping the exclusivity deal that we signed 50 years ago in August, saying, yeah, we'll still take dollars, but not just dollars. We've seen all of these things that are integrating Saudi into the fold, including not going to the G7 meeting and going to the meeting in Novigrad, where in Novigrad, we had a meeting on the sidelines between Putin, Dilma Rousseff, and Sergei Glaziev. And this was announced by Dilma Rousseff. Dilma Rousseff is the president of the New Development Bank, and she was the former president of Brazil. And she said, look, in principle, we've agreed to a new settlement currency called the unit. And Sergei Glaziev, Sean, is the reason I've been saying for 4 years and over 4,000 videos on this subject that we would see a BRICS common settlement currency. He said it would be a basket of currencies of the BRICS plus nations and a basket of commodities. And it may ultimately turn out to be that. But what we understood from Dilma was that there was a meeting on the sidelines, and she said, look, we've agreed in principle. This was a month and a half ago. We've agreed in principle to this new settlement currency called the unit, and it would be traded over Project mBridge. And I'm going to come back to Saudi's role in all of this in a moment, but right. Project mBridge is a cross-border payment system that was designed by China, Hong Kong, United Arab Emirates, and Thailand in an effort to allow countries to trade with one another cross-border without any interference of the SWIFT. And I found it ironic that the two first trades they did in 2023, test trades, if you will, were for gold and oil, where China used digital yuan to purchase gold and oil from United Arab Emirates. And the reason I find that interesting is I've been saying for over a year that gold and oil have been remonetized. They're worth more than the paper that buys it, as an example. China was awarded a huge huge contract rather from Iran to modernize their biggest airport, paid for it in oil, a couple $1 billion. And at the same time, you look at the way China's been going around using digital yuan to buy commodities like corn and soybeans from Brazil, which is then paid for in yuan, but that yuan is immediately convertible into gold on the Shanghai Gold Exchange. So gold and oil and commodities are becoming, as Zoltan Pozsar says, the center, the focus of Bretton Woods 3, if you will, a system dominated by commodities. If you remember, the BIS, the Bank of International Settlements, reclassified gold as the world's only other tier 1 reserve asset. So gold and oil are becoming very, very important, to say the least. So in any case, Delma said, yeah, we've agreed in principle to this new settlement currency called the unit, which she said would be a basket of BRICS plus currencies with not any more than 30% of one nation's currency to dominate the basket, and a basket of gold, 40% in kilobar form, deliverable upon request. And there's some interesting facts about that, which we can talk about in a moment. And again, remember, gold being the only other tier 1 asset. Now, going back to Saudi Arabia, if you look at Project Enbridge, which Delma said this new unit settlement currency would be traded over Project Enbridge. Sorry, I'm dealing with some Florida allergies. In any case, would be traded over Project Enbridge, which is not compatible with US dollars. And what's very interesting about Project Enbridge is that Saudi Arabia just became the 5th full participant in Project Enbridge. So even though they are being coy about the way that they are fully integrating into BRICS, they are part of the New Development Bank. They have joined the Shanghai Cooperation Organization. They are a full participant in Enbridge, which will trade the unit. They are making moves that are more or less showing which way they are leaning. By not going to the G7 meeting and going to the BRICS meeting, it is something that I think is very telling. So in any case, this was something that they really didn't talk much about here at the meeting. But the bottom line with it is that this is something with, I think, which is gaining steam, the Enbridge and the unit behind the scenes. And they are doing things, I think, in a very regimented fashion. And if you read the white paper on the unit, it's very interesting. And it also betrays why we've seen north of 40 countries repatriate their gold from the New York Fed and the Bank of England, which have traditionally been the places to store gold because it gave direct access to the COMEX through the New York Fed, and the Bank of England holding it on behalf, really, of these countries to give access to the LBMA. And so you have 40 countries who have brought all their gold back. A prime example is India, who bought 1.5 times the amount of gold they bought all of last year in the first 4 months of this year, while repatriating it all, along with 100 metric tons that they've held at the Bank of England since 1991. Conventional wisdom says it's about weaponization of the treasury market, and that's why these countries are bringing their gold back. But that's not true. If you read, that's part of it. If you read the white paper on Enbridge, it says that the gold that will be used to fashion these tokens, to make these tokens, are held within the borders of the countries that possess it, independently and continuously audited. The point of it is there won't be any one central location for the gold to be held on Enbridge, like in Beijing, like in Moscow, like in Dubai. No, every country holds it themselves in a cooperative manner, but has it independently and continuously audited. So when you talk about how can this work, look, this is not a common BRICS currency. That's the first thing to keep in mind. And so every country will, over Enbridge, trade their central bank digital currency, which incentivizes, being frugal and being a good steward of your monetary ecosystem. And at the same time, whether it be through trade imbalances or just the desire to sell commodities for something that is protected from inflation and uncertainty, that being gold, these countries can request the unit settlement token. So it's a settlement token independent of central bank digital currencies. So everyone maintains their own monetary ecosystem, but for settling in commodities or for whatever other reason, like imbalances, or just because I want the unit token, this is their proposal. And I think it works. I think it works because you don't have one central authority ruling the roost. And it inspires, if you will, I've been saying for 3-4 years, the only way to inspire confidence, Sean, is to have a marriage between blockchain technology and something like gold. And what better thing to use than gold than what the most influential bank in the world, the most powerful bank, the BIS, says is the only other tier one reserve asset. So although they haven't released it yet, what they have really made a strong declaration of over the last 2 years, is to continue to trade in local currencies and, free from the Western interference. And by using mBridge as an example, or even before you do the CBDC, using CIPS, the cross interbank payment system, these countries will start to sever the tie to the dollar and trade locally. And you can see that, like even between China and Russia, nearly 100% of all their trades are done in ruble or yuan. And so this is happening. It's accelerating, laying the foundation for that move when they will issue some form of a common settlement currency. But this is not something you do by pussyfooting. You do it when you have a strong, cohesive, critical mass infrastructure. And even though they're growing in a admirable fashion, they're not quite yet ready to, challenge the Western hegemony in their face yet. But you can see it's a progression that is gaining steam for sure.
Awesome. So let me just play the devil's advocate over here, right? And ask a very scary question. Can this process of, decoupling from the West and the new monetary unit be stopped? And let me just paint you a scenario. I think during his campaign trail, Trump, which most probably he's going to win, right? And we have heard multiple times that he's going to hammer countries that leave the dollar, the 100% tariff threat. So do you think this will deter countries from ditching the dollar? Is the US consumer market big enough to scare people away from moving away from the reserve currency?
Well, it's dangerous, I mean, it could have the opposite effect. It could crystallize and solidify the resolve that these countries have. It could push them closer together. And I think that's something we need to be very careful about. It's one of these deals where, yes, not having access to the U.S. market is a big blow. But when you look at the size of this growing union of the BRICS countries, they represent a very challenging mass of humanity, larger swath of global GDP and human population as it is. And when you throw into it the Belt Road Initiative, the Shanghai Cooperation Organization, the Eurasian Economic Union, along with the BRICS, and these are largely all the same countries that are aligned with the same interests in many respects, you're talking 80-90% of human population. So yes, it would have an effect at first, maybe, but ultimately, no, this is something that could increase the resolve that these countries have, that dealing with the West in a punitive manner is, this is their own problem, meaning our own problem. And this is something that they are trying to push back against. And look, I think that it's the wrong message. If you look at one of the things that they talked about, and I wrote this down, the BRICS countries and the way that they talked about things, they're very, very open about this type of behavior, and saying that they want a world that is less punitive, that is less about sanctions and more about cooperation. In fact, that was really the message that I took away from their statement about the way that the BRICS meeting went. And quite frankly, I think that um, it's something that we should be very careful about, and ultimately could lead to uh, a more unified front on the BRICS nations. And not only that, it can lead to higher inflation as products become more expensive. Normally, these tariffs, they don't. It's the American taxpayer that bears the brunt on the tariffs, because the country has just increased the costs to compensate for it. And so it's the taxpayer who ends up paying more for it. And you see price inflation, which then, when these inflationary effects take hold because prices are rising, you have the Fed come in and try to, raise interest rates to quell the price inflation, which slows the economy. There are a lot of unintended consequences with these tariffs. And but I will say one thing. If he's going to do tariffs, if Trump were to win, I would rather see him do tariffs across the board than to target a country like China. I think it's more fair to do it across the board than to target a country which only has more negative consequences, unintended perhaps. But I'm not a super big fan of the tariffs, quite frankly. But I guess I'd rather have tariffs than things like income tax. But I digress. Anyways, yeah. I think ultimately it leads to a greater crystallization and a greater resolve of these countries who say this is just another example of this punitive behavior or the punitive nature of the West, where if you don't play ball, these are the kind of things that they throw at you. So ultimately, not good, and really not good for the consumer, who will end up bearing the brunt of higher costs. You hope that it would spur domestic production, that it would spur more manufacturing in this country, but we've offloaded so much of it. There's a time lag between the time that we can onshore all of our manufacturing and production and ramp it up. It's like last night in Trump's speech, he said he would give a tax break, for people who bought cars in the United States, as long as they were purchased or produced in the United States. So it's really in an attempt to, in my opinion, to spur production and manufacturing in this country. But every action has an equal and opposite reaction, and at first it may not be so great.
Well, staying a bit on US economic policy, I think, no matter whether Harris or Trump gets in, the deficit is going to rise even higher. What's really concerning is, the big cargo of tariffs to whack companies, even American companies like John Deere, who's trying to offshore production to Mexico. So doesn't this actually increase the national deficit? Doesn't it involve unleashing a tsunami of bonds that will eventually increase the national debt? And won't that keep bond yields high and push us closer and closer towards the day of default?
Yeah, I mean, I guess you could say that. You have higher interest payments on debt due to inflation, and tariffs can raise inflation as goods become more expensive, as we mentioned, and which again leads the Federal Reserve to increase interest rates to combat that inflation. But not only will those higher interest rates increase the cost of servicing the debt, meaning the government spends more on interest payments, which add to the deficit. To your point. It ultimately will, in my opinion, lead to these countries deciding to break free from the West. It would lead to these countries deciding, well, maybe now is the time to issue the common settlement currency. It would lead these countries into being more provocative and maybe speeding up their desire to not settle for things like energy or any of their commodities in US dollars. It's important to note that we're supposedly transitioning into a green economy, yet 85% of all the rare earths are mined in the Eurasian continent. 100% have last 2 years have been refined in China. And so these types of actions not only will start to distort the natural balance of things, it could lead much more rapidly into these types of decisions that now they issue a common settlement currency. Now they make admissions that we really don't want to accept dollars for energy anymore. It could lead to further divestiture of U.S. treasuries, and because of these punitive types of decisions, and a greater drive or rush into commodities, which is what we are seeing. But they've been doing it in a very slow, methodical fashion, not in your face. I think that could change very quickly. And, it's another thing like Trump saying, any country that wants to leave the dollar as being the world reserve currency will face, 100% tariffs on all of their products. So, at some point, it's one thing to realize that it's detrimental to these countries to not be able to access the U.S. market. It's another thing altogether when you realize that the currency is being inflated away to the tune of $100,000 per second, that the consequences of being on the wrong side of the U.S. are very detrimental in terms of forfeiture of your assets punitively. And these types of coercive, punitive declarations only seek to reinforce what the BRICS are all about. Everything that the BRICS talked about in this last meeting was about cooperation, was about mending fences, was about not being coercive. You look at, as an example, and I think it's all part of a bigger picture that they're trying to paint. Iran and Saudi Arabia, right? Sunni Shiite, hating each other forever. China brokered a peace deal last year with them. They've been talking about putting embassies in each other's countries, but now they're going to do joint naval exercises. You look at Modi and Xi Jinping have met on the sidelines and agreed to allow, again, patrolling of the border and to mend fences and to work on greater relations, in the respect that the whole idea here is that everything that the BRICS have done, whether it be, the presidency rotates, whether it be there is no binding agreement for the BRICS countries, they're all doing it in a cooperative manner. Everything they're doing is cooperative, and they're really pushing, in my opinion, the concept that they have their house in order, that they are mending fences for the greater good. They are putting old disputes behind them and working on peace. And even in their statements that they were making, very, very reminiscent of that type of ideology, they're saying, look, this is all about cooperation, and we want a world that isn't coercive, that is free from sanctions, that that the U.S. has been imposing. So when you just go down this road again with the new administration, maybe with greater vengeance in terms of Trump's willingness to really go hard on sanctions for countries that break away from SWIFT, and tariffs on countries that want to that aren't playing ball the way that the West wants, I think it could very quickly backfire and have unintended consequences that only bring and accelerate what the BRICS countries are trying to do and bring it more into focus.
I think what's really shocking is the formation of a BRICS gold exchange. I believe it was after the summit, one of the finance minister of Russia, he kind of proposed the idea to the BRICS members that, hey, why don't we come together? We pool together all our resources. We have the biggest gold supply in the world. India, China, Russia combined together. We are more or less the biggest buyers. We have the biggest demand to buy gold as well. So why don't we pool everything together? And this idea is kind of terrifying for the West, because we all know that the centers of gold, the hubs is somewhere in London, the LBMA, as well as in New York under the COMEX. So how does this actually change the game? Will it help to promote true price discovery in gold and silver moving forward?
Yeah, I think it would very much. And I think that what we are seeing right now in essence is a growing, first of all, in terms of issuing a BRICS precious metals exchange, I think it makes great sense. And you can argue that they have been kind of hedging their way towards this already. And then I'll comment on the idea of the exchange. They have, first and foremost, been, before they do this, I think they have been exploiting the Western system for its idiocy and its stupidity of suppressing with tremendous leverage the paper market. And these exchanges, excuse me, have backdoors to them that allow for delivery. The LBMA is 140 years old, the COMEX since 1974, and most of these countries, until just recently, were never coordinated as they are now. They were never motivated as they are now. They were nowhere near as sophisticated or wealthy than they are now. And so what we have been seeing are these countries gradually depleting the above ground stockpiles in the Western exchanges, LBMA and COMEX, using the suppression of the paper market. They've also been listing products on their regional exchanges, which we've been seeing. You see, for example, the Shanghai Metals Exchange has grown over the last 6-8 months by, I don't know, 400, 500, 600%. The cumulative volume of the Shanghai Metals Exchange and the Futures Exchange now exceed that of the COMEX, making it the second most actively traded commodity exchange on the planet. And number three, we see a drive in particular with China to acquire these resources before they even reach the Western exchanges. And you see China flying around Latin America buying up doré and concentrate. Doré are crudely refined bars that the miners will refine before they send them off for full refining, maybe 40, 50% pure. And the concentrate is a byproduct of all of this, and it's like a sludge. But they'll buy it from the miners directly, disintermediating the markets and the commercial bullion banks, and they ship it home, paying more than what the West will pay substantially, and then send it home to be refined in China. So you take into account they want to issue a precious metals exchange. These are the countries that produce it. These are the countries who understand it. These are the countries who have been massively accumulating it. It just makes sense. It makes sense because the system in the West, I believe, is being exploited by these countries who understand the stupidity of the way that we are doing things, where on the LBMA in silver, we are trading upwards ends of 2.9 billion ounces of silver per day. That's 3.5 times annual global mine supply. 90% plus are naked paper contracts by these stupid bullion banks who are short between 4 and 6 billion ounces. In gold, they're trading roughly 200 million ounces a day. They say 20 million, but it's 10 times understated as based upon the fact that they only post the final settlement numbers. All of the trades throughout the day equal to 10 times the amount of trades that are done to reach those settlement numbers. So you're trading over 2 times global mine supply per day, every day, all of which is naked. And so these countries are exploiting it. And you look at COMEX, it's the same thing. You have, eight commercial banks that have the largest short position in any commodity ever traded on COMEX ever. That being in silver, somewhere between 700 and 800 million ounces short. And as the price has been going up, they're getting hammered. So what these exchanges represent is no different than what Bernie Madoff did. It's a Ponzi scheme. The rehypothecation, where if everyone stood for delivery, a tiny fraction would get their metal and the rest would be cash settled, which is the same thing as a default. Right. And there was a lot of talk about the BRICS grain exchange here, but they've been talking about this for almost a year. And when they were in committee discussing it, one of the guys in the Russian finance ministry says, look, we produce and consume more grain than they do in the West. Yet all of the prices are controlled on COMEX. But with the development of the new grain exchange, that will change. In other words, they know what we are doing with commodities. They understand it. And just because they enunciated it and verbalized it quietly in regards to the grain exchange, don't think that they don't know what we're doing with the metals exchange. And the only reason that this hasn't sprung up and had greater priority is that I think that they're trying not to rock the boat. In other words, if we're stupid enough to suppress these commodities with leverage, using recency bias and normalcy bias, where these countries were not coordinated, sophisticated, motivated, or had any desire to stand for delivery, but they are now. In London, in the month of August, 8% of all of the silver that was available for delivery was delivered. Who has that kind of money to buy upwards ends of 30 million ounces of silver and have it delivered? And all of this metal is slowly being drained meticulously and religiously with by these countries using the stupidity that we have in place by suppressing the market to that degree, where 90+% of all the trades are paper naked trades by these bullion banks who are getting deeper and deeper and deeper in the hole. These countries have the ability to stand up against the West. They have the wealth to do it, and now the sophistication and the understanding and the motivation and the coordination. So once I think they have drained as much as they possibly can from the Western exchanges using the stupidity of our suppression of prices, which at some point I think the coordination of the motive of the bullion banks that are doing this in a seems like in concert with one another in a collusive fashion. I think we're getting very close to that point where one of the banks says, "Screw it, I'm out. Every man for himself. You guys go down with the ship. I'm covering." And as soon as we begin to see that type of covering of these huge, wickedly large short positions that have been done to support the illusion of the strength of the bond market, of the currency, and many would argue, myself included, in silver, to allow the military-industrial complex to continue to produce high-tech weaponry that needs copious amounts of silver. This is why you have 8 banks short the largest short position in any commodity ever traded on COMEX. 8 stupid Western banks have this massive short position in silver. Why? Why would you do that when India is buying 7, 8, 900 million ounces over the last few years? Why would you do that when China, the second largest producer of silver in the world, is flying all around the world buying doré and concentrate? Why would you do that when Russia says we're now going to add it to our state fund and start accumulating it daily for the country? No one's ever said that before. Why would 8 Western banks be holding down the price to the largest short position COMEX has ever seen in a concentrated, collusive manner? It's because they're trying to keep silver cheap enough and off the radar and a barbarous relic so that the military-industrial complex, who I would argue has been running the country this entire administration, not President Biden, can make weapons. But, the silverwars.org does a great job of talking about this. I would encourage people to check it out. But anyways, the bottom line is that these are all things that will ultimately end badly. And when there is a default, on the COMEX, it's an exchange, and there are rules put into place. The LBMA is over the counter. It's a handshake. There are less rules, less regulations, and less transparency. But on COMEX, you have silver 16, 17, 18, 1900% rehypothecated or more. And gold, I don't know how many times rehypothecated, but everyone owns a contract that they think they can deliver upon. But that same contract is held by, 20 other people. And if everyone tries to request delivery, just like Madoff, everyone said, "Give me back my money," the whole thing blows apart. The exchange can then impose cash settlement or force majeure. That's the same thing as a default. And then when the Western system pukes on itself for this, manipulation, if you will, that is for the first time ever really being challenged by delivery, that's when you see whether it be the exchange in Dubai, the exchange in Shanghai, or this coordinated BRICS exchange takes over and price setting finds legitimacy. Just one other point. When you look at the way that they're doing things already in Shanghai, when you want to trade a bar on the Shanghai Metals Exchange, you first have to buy a bar from one of the pre-approved 6 or 7 refineries who then laser etch a serial number that is attributed to a specific contract. They're learning what not to do, and that is to rehypothecate and to do things that lend to an exchange not being legitimate.
Right.
Or a currency not being legitimate, talking about backing it with something like gold to inspire legitimacy, authenticity, veracity. And I think they're learning what not to do in a meaningful way. So by the time they do issue this metals exchange, or by the time they do issue the grain exchange, or the things that they are putting into place to challenge the West, it will be done in a very regimented fashion. And by the time they issue all of these other countries, which this is Brazil's main focus, they now take the presidency from Russia, is to integrate other countries into the fold. But this is why they didn't immediately bring anyone into the fold this time, because they want to backfill and make sure all of the issues, like between Russia or between China and India, as an example, would be addressed and taken care of, so that this union grow strong in every way, not just economics, but also in social and moral, and all of the things that would plague this group from excelling in their endeavors. And I think you can see this is kind of how it's all starting to play out.
So it kind of sounds like a gold and silver revaluation is coming. And if it does happen, what are the mechanisms to go about it, right? We have schools of thought that says you take the amount of gold and then you just peg it to, the M0 or the M1, M2 money supply. And there are other people also saying that, you just remove the amount of paper leverage that's suppressing gold and silver prices, and then just let the prices go wild, let it just go shoot up. What do you see going forward? How high can the price of gold and silver actually rise realistically?
I mean, first of all, Janet Yellen could just say this is what it is. She doesn't need congressional approval. She can tell Jerome Powell, I want you to revalue gold to this number. The head of the Dutch National Bank has been talking about this for a long time. He said, we should revalue the gold that we have that's worth 20 or 30 billion euro right now. It's valued at $35 an ounce across the board on all the European countries. It's still the Bretton Woods number. In the US, it's valued at 42.22. They revalued it or made it official sometime after it was released from the peg in 71. But anyways, the bottom line is that you can't make it up. Every single central bank balance sheet holds gold in what's called the gold revaluation account. And as it is right now, the gold that is held in these accounts is not able to be to offset liabilities. And so the way that they hold it, it's the gold that they physically hold is in an asset on their balance sheet, but on the liability side is something called the gold revaluation account, which mirrors the amount of gold in the asset category. So it offsets one another, balances out. There isn't an ability, if you will, to offset it at this point against assets or liabilities rather. And so the head of the Dutch National Bank keeps saying, we need to do this, we need to do this. Well, it became even more relevant when Cynthia Lummis, the senator from Wyoming, speaking at the Bitcoin conference in Tennessee, after Trump got off the stage talking about establishing a strategic Bitcoin account to help pay down the debt, she got up and said, yes, and I'm going to submit a bill requesting that we revalue the gold that the Federal Reserve is holding on behalf of the Treasury to fund this. And so you're getting more and more and more people talking about it. You have Jim Rickards as an example, who said $27,000 an ounce. You value it, the gold held at Fort Knox, supposedly, which hasn't been audited since '53, against M1. And there are others that will use M2 and do it. And whatever the number is, look, every $4,000 increase in gold would give a $1 trillion free and clear deposit into the Treasury General account. As crazy as this sounds, okay? And I'm not, I did an interview with Michelle McCory of Kitco, and I said this, and that's actually the title that they ran with, and is that you put it 130 or 140,000 an ounce, as nutty as that sounds, and just make a decree and say any government that wants to send their gold to the U.S. Treasury will pay them 130,000 an ounce. That value based upon the 8,300 and whatever 30 metric tons we have would render our 36 trillion in debt almost completely balanced with our assets. Is it crazy? Over my shoulder is President Roosevelt. This is when gold, everyone owned gold in 33. It was currency. He confiscated it and then by decree devalued the dollar by 40%, increasing the price of gold by 40%. It happens. It's happened. Could it happen? Yeah, why not? It's probably a lot easier than outright default or hyperinflation. Yes, it would create inflation, but it's probably something that would they notice as being less painful than the other options. But could it happen? Yeah, I think that is. Look, why would the most powerful bank in the world, the BIS, reclassify gold as the world's only other tier one reserve asset next to U.S. treasuries and dollars after almost 80 years of it just being dollars and treasuries? If they didn't have something big in store for gold, why would the central banks be buying gold at a level the world has never seen before and repatriating it? Literally, no one's in 100 years of central banking, nothing like what they've been doing the last few years has ever happened before, where they're buying gold hand over fist. Of course, it is the only other tier one asset in the world, and they're all repatriating that gold at the same time. Why would the head of the IMF say, write a report in 2023 saying gold as an international reserve currency, comma, a barbarous relic no more, question mark? Why would Kristalina Georgieva, the head of the IMF, say a CBDC not pegged to something is just fiat? And of course, in principle, we already see that the unit settlement token is 40% gold. I've been saying for 4 years now, the only way to legitimize a new system is to marry blockchain technology with gold. And that's indeed, I think, where we are ultimately heading. But in order, if you look at the 40%, that's what the Swiss used when their currency was backed by gold, 40%. That gives 60% monetary latitude, money creation and whatnot. And why not put gold at a level high enough to be able to efficiently enact or use monetary tools? So yes, I think, as crazy as it sounds, that it would benefit all of the central banks who have been the biggest buyers of gold in the world to raise it to a higher level, to allow the offsetting of gold against your balance sheet liabilities. And I think it's something that they notice. And when Cynthia Lummis, the senator from Wyoming, says it, to me, it's a whole lot more noticeable than when the head of the Dutch National Bank says it. But the fact that both of them are saying it, to me, tells me that the West understands it, notices it, but so does the East. And these are the countries that are buying it and producing it and possessing it in a way that is we've never seen before. So yeah, I think there's a probability, don't know how high of a probability, but better than ever before, that is on the table, and it would immediately not only render countries' balance sheets in good order, but it would reestablish credibility in a system that is massively lacking it. No one trusts it anymore. No one trusts politicians. That's why there are ridges on coins, because you go all the way back to the Roman time, and they had to pay their soldiers all around, this expanding empire. So it's getting more expensive. So they would just lightly trim around each of the coins and get a pile of shavings that they could melt down and fashion into more coins. And that's just politicians' way of choosing inflation over the tough decisions or over austerity. It was true back then, and it's true now. So the only way you will ever get, I think, credibility in a system is to peg it to gold. And if you don't want it to be redeemable, because, convertible currencies convert. President de Gaulle proved that. I think you just tie it to blockchain and make it very, very transparent and very open, and you have a system that has a fighting chance of credibility and sustainability. So yes, I do think ultimately that is on the radar, and probably a higher probability than people would give credit to.
Now, Andy, at this point, right, shouldn't the US be going out there to the global markets and buying tons of gold? Shouldn't they fill up 3 or 5 or 10 more Fort Knoxes full of gold in order to benefit from this revaluation? Why aren't they doing that? Are we past the point of no return, or are they just, wearing blinders that they can't really see what's going forward?
Yeah, you would think if they did it openly, it might signal lack of confidence in the dollar. But what happened to the 12 billion in gold that the Ukraine sold to fund the war? What happened to Gaddafi's gold and silver, or Hussein's gold and silver? If you watch the 3-part interview Bix Weir did with Jack Sermon, who has been at the U.S. Mint since its establishment in '86, I almost fell off my chair listening to it. This is the guy that developed the Silver Eagle program. And Bix Weir, Road to Ruta, I would suggest everyone listen to it, last year. And he comes out and says, look, I'm pissed off. This guy's 75 years old. He's already worked there forever. He's like, I'm pissed. He's like, I developed the Silver Eagle program. And the law says that they're supposed to, the law that was used to establish the mint in '86 says that the mint has to produce as many Silver Eagles as is demanded by the public. During the entire pandemic, Silver Eagles were ridiculously expensive and impossible to get. And he admitted to Bix Weir that his seniority, his bosses said to him, only make as few Silver Eagles as possible without creating a backlash. In other words, do not meet demand, just way curtail production. He said that the authorized purchasers came to him at the end of the year and said, we'll take another 36 million, and they only gave him 12. That he was told to do this. So are we stockpiling silver at the expense of what the law says on the U.S. Mint charter? Are we accumulating gold and silver and not being forthright about it? Why have we never audited Fort Knox? Why did Saudi Arabia just get caught importing 160 metric tons but not telling anyone, as they're supposed to tell the IMF? The Swiss import-export numbers caught them. Why is China doing the same thing? The British import-export, London import-export numbers caught it. And when they're going around the world buying doré and concentrate, that's not 995 fine, doesn't need to be reported to the IMF, and it's not coming off of an exchange. We don't see it. They're the second largest producer of silver in the world and the largest producer of gold in the world. Are they telling us how much they're producing? If it's bought by a proxy bank, like a commercial bank, they don't have to tell the IMF. Are we doing the same thing? Are we buying things in a less than forthright manner? Are we taking delivery off of COMEX? Are these accounts, these customer accounts that JP Morgan and Goldman Sachs have, are they U.S. government? If you look at the CME charter, the metals exchange, the COMEX, it says that they do trade on behalf of sovereign governments. So is the United States one of these governments? Are we accumulating gold and silver without anyone knowing? These are all things that are tough to decide. But I would argue that we probably have a lot more gold than we tell the world. And I think China and all of these countries have way more gold than they're telling the world. And that all leads back to, if you were planning on issuing a system tied to gold, and your desire is to accumulate gold, the last thing you want to do is tell people what you're doing. Because in a world where information travels so rapidly, if Biden fell down getting out of bed this morning and it hit the news, it would be all over the world in 1 second and at everyone's phone, and right. But so if you're going to do something as provocative as start massively accumulating gold to tie it to a new system, you're going to cut off your nose to spite your face by letting people know that. So better to suppress the paper price, accumulate the shit out of the real thing, and not tell anyone. And that goes for the US, for China, for any of the BRICS countries. And I would say the majority of the metal that is being purchased by these countries and or produced is not disclosed. Just enough. My whole career, everyone said, you can't believe anything that the Chinese say in terms of how much gold and silver they actually own. Because, their numbers stood at 120 metric 1,200 metric tons forever, and they never changed. And so again, the point of it is, why tell anyone how strategic your strategic stockpile is? And I would hope that goes for the United States as well.
All right, Andy, one last question for our viewers, right? So the price of gold has been rising to 2600, 2700, and we're about to crack 2800. So there's a lot of people, they are scared, and the default option for them to put their money is in the stock market, right? Why do you want to buy gold right now at record highs when I can just dump it into the S&P? Is there an argument you can give them to really rationalize why they should put at least a portion of their money into gold and not everything into stocks, which are at insanely high valuations today?
Yeah, I mean, the S&P is just as at all-time highs, just like gold. You go back for 25 years with using the S&P 500 since 2000 with dividends reinvested, you get 9.6% annual return on average. Gold's at 9.9%, has no counterparty risk. You look at stocks like or indices like the S&P 500 or even better, the Russell 2000, and you see massive red. These, by and large, the bigger swath of the economy that represents these larger indices, the S&P 500, the Russell 2000, almost all of them are underwater. You got a handful of stocks that have been leading the way, which is called BREDT, BREDTH. And it's poor, very poor. And it's usually a very ominous sign where it's an inverted pyramid, where just a handful of these stocks are holding up the entire market. And I think that when you talk about money creation and when you talk about inflation that we've seen and low interest rates over the last 15 years, that the primary beneficiary of these higher prices have been equities, have been bonds, have been real estate. And largely because of something called Gibson's paradox, which is the inverse relationship in essence between real interest rates and the price of gold. They had to step on the price of gold and silver, and everything else went parabolic, yet precious metals got hammered. Precious metals, they want us to believe, are a commodity that have, that have no monetary value any longer. And they do that by using these levered futures contracts where you can trade 3.5 times annual global mine supply per day in silver in London, just in London, and 2 times global mine supply in gold, just in London. That's not even taking into account the COMEX, where you can distort supply-demand fundamentals. And if gold and silver would have been roaring, it would have signaled that the emperor wears no clothes. It's signaling that it's the Wizard of Oz behind the this little frail old man behind the curtain. And so they've stepped on gold and silver. So we don't even know where price discovery would land gold and silver, but arguably much higher. Right. You look at UBS, or excuse me, Deutsche Bank just came out and said, what did they say? They said that if Harris wins by 2029, gold's at 4,000. If Trump wins, it's higher, going up all the way up close to 4,200. You have all these banks saying that will be north of 3,000 by next year. I don't know. In my money, silver is the most undervalued asset on the planet because it hasn't been allowed to express itself. And gold, even at these levels, it's under its inflation-adjusted high. It's being accumulated by the most sophisticated, well-informed traders in the world at a level the world has never seen. It's outpaced the S&P 500. It has no counterparty risk if it's in your own possession. And, there's, that video and the book called The Great Taking by David Rogers Webb. I don't know if you've seen it, Sean, but if people haven't, you can go to his website. I think it's a free book, greattaking.com, or better yet, go to YouTube and type in David Rogers Webb, The Great Taking. Watch it. He narrates it for an hour. And it talks about the DTCC, how all of the securities are held in this fund or this trust where ownership or priority of ownership, you are subordinate to others ahead of you. It's a very frightening thing where counterparty risk takes a bigger role in all of this. And I don't know, did you see what happened last Friday with the bank in Lindsay, Oklahoma, by chance? I don't know if you saw that.
Not exactly.
So what we saw in Lindsay, Oklahoma a week ago Friday was the first bail-in in this country. And it was written into law in the Dodd-Frank Act, and yet no one's talking about it. You want to talk about reasons to own things in your own possession. In Lindsay, Oklahoma, the bank failed, and they had $7 million in uninsured deposits. You contrast it with Silicon Valley Bank had hundreds of millions in uninsured deposits. Oprah Winfrey and all the Silicon Valley tech startups, of course, they were bailed out illegally, but because the Dodd-Frank Act says, no, they won't be bailed out, they'll be bailed in. Well, this bank was failed, and another bank took over, and those deposits last Monday were made available, those that were insured. The uninsured deposits, the FDI said 50% would be made available that Monday, and the other 50% you will possibly get over the next 4 years after the assets of the bank are sold off. In other words, you have $1 million in this bank, 250,000 is insured. That leaves 750 uninsured. You get half of that. That's 375. That's 6.25. You get that Monday. The other 375, say goodbye to. You're never getting it. And if you do, you have up to 4 years to receive it in the form of stock of the new bank. That money's gone. And so when you talk about reasons to think differently, to be unconventional, now is the time. When you think about having removal of counterparty risk, that's going to be more pervasive. And this is the reason you're seeing all these countries buy gold and silver and bring it home too, because of the counterparty risk that has been baked into the system, whether it be on that level through sanctions and outright confiscation of assets, or on this side of the table, where traditional assets like stocks and bonds and even banks are not safe anymore on many levels. So why would you buy gold and silver? You buy gold and silver because it's wealth that has outlived 2 world wars, German hyperinflation, the Great Depression. It's an asset that has no counterparty liability. And in a world that is moving in the direction that ours is, those kinds of things will become very prominent. And that would be counterparty liability, that would be default risk, that would be inflation risk. All of these things, to me, fall into the camp of precious metals. And I think in an unconventional world, it's time to think unconventionally. If you are not thinking as though you're a contrarian, you'll end up a victim. And if all of your assets are in dollar-based assets, you'll end up going broke if this thing breaks. So yeah, I think it's never been more important to own gold and silver. And I think gold goes a lot higher. And yes, it's at its all-time high or damn near close to it. But the real value, it's in silver. It's the value of a generation. And it's 40% of its 1980 high when the money supply has increased by 14-fold. So, be that as it may, to me, it's the place to be.
Awesome, Andy. Always great to have you on the show. And how can our viewers find you and learn more about what you do?
We just started our own YouTube channel. We've got 26,000 subscribers in a very short period of time, and I'd love to have you on my show too one of these days, Sean. It's brand new. I've only done 4 or 5 episodes. The best way to find out or get questions answered or request our price list, which we don't publish. We have some prices, a very limited capacity up to a small order limit on our website. But if you want a really good prices, that'll be as good or better than anywhere in the country. It's info@milesfranklin.com. Just say Sean sent me or Sean Fu sent me. And any questions that you've heard on this, you can ask. If you just want the price list, you can ask. If you do, and it's only going to work in North America. At the same time, if you have specific questions, you can put your phone number down and we'll contact you. But that's info@milesfranklin.com would be the best way to see our really good prices and to get your questions answered.
Awesome. All right, guys. So we'll leave a link below in the comments so you can check Andy out. And as always, Andy, great to see you once again.
It's good to see you too, brother. I'd like to do this again with you as often. There's a lot to talk about. It's going to be, I think, really, Sean, I think that the craziness happens after the election.